So the major changes that we made to our outlook this month is obviously resulting from Russia's invasion into Ukraine. On the supply side, we see losses, as you mentioned, of 3 million barrels a day from Russia. Of course, these losses could increase. Russia is the biggest oil exporter in the world, exporting about 8 million barrels a day of crude oil and products in 2021. So as sanctions, while sanctions so far, for the most part, exclude energy trade, we have embargoes in the US, Canada, in the UK, but for the most part in Europe, the biggest markets for Russian oil and China, sanctions are so far not affecting energy trade. But what we are seeing is that buyers, almost all the major oil companies, are stepping away from doing business with Russia at the current time. So we're expecting oil demand in Russia to fall. This is the biggest. The sanctions are having a major impact on its economy. And we're thinking that oil demand will fall in Russia, but also globally. So for oil demand, the biggest decrease we have for 2022 is, of course, for Russia, as sanctions bite, air travel slows, and we now see growth of 2 million barrels a day for 2022, sorry, which is about 1 million barrels less than we had in the last report.
Toril, I want to dive into the supply side of things before we talk further about demand. To what extent can OPEC producers, Saudi and the UAE specifically, make up for the Russian shortfall? We've got Boris Johnson, the UK Prime Minister, heading over to the Gulf today to seek an increase in production from Saudi and the UAE.
Thank you. No, so producers in the Middle East, including Saudi Arabia and the UAE, have obviously already ramping up production all over 2021 and into 2022 as they unwind those cuts that were put in place following the COVID crisis. And we are expecting the OPEC Plus countries to continue to increase production in 2022 by about 2 million barrels a day as those cuts are wound out. But we see that there are additional capacity within the Middle Eastern producers to make up for the losses. Not all the OPEC Plus producers have the ability to increase productions. We're seeing shortfall in Nigeria, Angola, Malaysia, and so forth. So Saudi Arabia, we think that they could increase production with a little bit more than 1 million barrels a day in the short term. They have spare capacity of more than 2 million barrels. UAE also holds significant spare capacity. But so far, we're not seeing a willingness to increase production beyond the OPEC deal that stipulates just a modest monthly increase of about 400,000 barrels a day combined.
What about the prospect of any additional supplies coming from Iran?
Of course, we're watching very closely the negotiations over the nuclear deal. And if it seems like the talks have stalled for the moment, just close to the finish lines. But if a deal is reached, we think that Iran could add about 1.2 million barrels a day of supply to the market within 6 months period if sanctions are lifted. Iran also holds significant volumes of oil on the water in tankers, 100 million barrels we estimate today. And this oil could flow to the market more quickly, we think.
Toril, let's talk about the demand side of the equation now. You've cut your forecast for demand growth for 2022. How much of that is down to the situation in China? We've got rising COVID cases there, the reimposition of lockdowns versus more broadly demand coming down as a result of the higher oil price.
We were already expecting demand growth in China to slow markedly in 2022 compared to 2021. The economy has been slowing, and particularly with the slowdown in the real estate sectors. But we're also seeing now that the rise in COVID cases and the shutdowns of many major cities and provinces will have a dampening effect on Chinese oil demand and its economy, which could also have implications for supply chains and manufacturing. So we've reduced our forecast for China with nearly 100,000 barrels a day. But to say oil demand in China, we're expecting now to grow by about 300,000 barrels a day, which is only a fraction of the growth we've seen over the past few years.
And more broadly, looking beyond China, how would you characterize the relationship between the price of oil and demand? In other words, what is the elasticity of energy demand?
So now we're seeing the increase in oil prices over the past month. Of course, we've seen prices come down in recent days, but even so, prices are up sharply from what we've seen in before the invasion of the Ukraine. So we're expecting that just the price impact on oil demand will cut consumption by about 400,000 barrels a day for the rest of the year. It also impacts, obviously, inflation and economic growth. So we're seeing the GDP impact also cutting about 400,000 or 500,000 barrels a day of oil demand for 2022.
Longer term, there's debate around what this crisis will mean for the energy transition. What is your base case? Do you see this geopolitical crisis leading to an acceleration of the transition away from oil, or do you see it handicapping the transition?
Thank you. It's a very good question. As we write in our oil market report that was just released, we say that we think that this crisis and the shock that the market is facing now, potentially losing a major producer, the third largest oil producer in the world, an important gas producers, is putting energy security first up front on political agenda. But one of the opportunities that it's bringing is obviously how the countries, politicians, consumers are choosing to deal with this. Is obviously going to be very important. And I think that this is going to accelerate the transition to clean energy, reducing its dependency on oil, not just from Russia, but in general. So we're seeing now that there are many opportunities for consumers, countries, to step away from fossil fuels and the dependencies on producers, single producers, to not only for transition, but for energy security. So we think that this will have major implications on the energy markets in the coming years.